On June 29th, BMO hosted a digital event about the global trade outlook, including potential outcomes of upcoming negotiations regarding the USMCA trade pact and how global trade architecture may change. Let's join in the discussion.
Welcome to Markets Plus, where leading experts from across BMO discuss factors shaping the markets, economy, industry sectors, and much more. Visit bmocm.com/Markets Plus for more episodes.
All right, welcome everyone. I'm Mike Miranda, president of BMO Family Office and head of investments for BMO Wealth Management. I'm pleased to welcome you for today's discussion, Global Trade Outlook, the USMCA, and beyond. We are meeting at a pivotal moment for North American trade with the USMCA review now underway. At the same time, trade dynamics are being reshaped more broadly by geopolitics, industrial policy, and shifting global alliances, creating a more complex and uncertain environment for cross-border business and investment. Today, we'll explore two key questions. What are the most likely outcomes of the USMCA review? What will drive them? And how should business leaders and investors position themselves in a world where trade uncertainty is elevated? I'm joined by two outstanding experts, Steve Verheul, former chief trade negotiator for Canada, who led negotiations for the USMCA and brings a frontline perspective on how the current discussions are unfolding, and Doug Porter, managing director and chief economist at BMO, who will provide a macroeconomic and market lens on the implications. So Steve, let's start with you first. You were at the table for the original USMCA negotiations. How should we think about what's different this time in terms of political dynamics and objectives for what countries want to get out of the review?
Well, to start with, I'd say that we're looking at a very different kind of discussion than we had in President Trump's first term. At that point, we were trying to negotiate 34 chapters of an agreement, and that was a very different kind of scenario than we're looking at now. Now we're looking at pursuing a number of bilateral irritants that the U.S. is trying to reach some kind of accommodation on. And there's a handful of trilateral issues that are also under consideration. But most of, if not all of the agreement is going to remain as it is now. And I think that we also have the broader context of the U.S. tariff policy that they've been applying mainly to the rest of the world, but also to Canada to some extent. And that's created a considerable level of uncertainty about what the U.S. policy is going to be going forward. But in terms of objectives, I think in broad terms, they haven't changed all that much. Canada and Mexico are still looking for preserving as much as possible of the existing agreement and the integration of the North American market, continuing to pursue that path. And I think that the U.S. is trying to see if they can gain some further leverage to better position themselves, particularly in the manufacturing sector. So a much smaller negotiation, more focused on a handful of issues, but obviously very important issues.
All right, thanks for those. Well, you touched a little bit on the leverage, so let's dig into that a little bit more. Canada enters these talks with both strengths and constraints, deeply integrated with the U.S. economy, but also heavily dependent on it. Meanwhile, we've seen that the U.S. continues to explore sector and blanket tariffs. So how do you assess the relative leverage on each side? You started that a little bit. And where do you expect other pressure points to emerge?
It's obvious to start with that Canada relies far more heavily on the U.S. market than the U.S. relies on the Canadian market. So we kind of have to start from that premise. But of course, it's much more complicated than that at the end of the day. The fact that the U.S. has maintained a CUSMA exemption for about 85% of our exports to the U.S., it means that the U.S. does attach a considerable amount of importance. And they've maintained that through all of the ups and downs that have occurred with tariffs coming on, tariffs being removed. That exemption for Canadian exports has continued. So that leaves us with the biggest challenges being the specific tariffs the U.S. has applied against exports of aluminum, steel, and autos primarily, although there are a handful of others as well. And I think that is going to be our biggest challenge going forward. So it's going to be a discussion focused fairly narrowly on manufacturing issues. And I think that gives us a bit of an edge going forward in that most of the rest of the tariff treatment we have is going to continue to be better than most other countries have going forward. But at the same time, I think we have the advantage of the U.S. industry being almost unanimously supportive of continuing the USMCA or CUSMA. The general public in the U.S. also highly supportive of continuing the USMCA. And almost all Republican senators and congressmen more broadly continuing to support the renewal of the USMCA. So I think that over the slightly longer term, we have a strong possibility of getting where we need to be, but it's not going to be a smooth ride going forward.
Well, when you consider the outcomes, the range of potential outcomes, what do you see as the most likely path for the negotiations? And I guess importantly, over what time frame?
I don't think there's been anything close to a good deal on the table so far. There were discussions last year, and a number of other countries reached agreement with the U.S., but those agreements are unlikely to stand the test of time because they're not particularly solid agreements. So I don't think we'll see an outcome in the short term necessarily. There's a bit of a window around the U.S. midterms where the U.S. administration may be looking for some kind of win. If that happens, there's a possibility for it to come together. But I think it's more likely that the discussions will continue beyond the midterms and possibly even into next year. And I think that's the most likely outcome. Canada and Mexico have shown flexibility on a number of the bilateral issues, but the U.S. has not shown much movement on their side. So not a lot of incentive for Mexico and Canada to start to move towards closing the agreement. So I think the most likely outcome is going to be that discussions continue and we continue to try to find some kind of accommodation on these issues. But the key issue in all of this is going to be what is the U.S. tariff policy going forward, particularly within North America and particularly on steel, aluminum, and autos.
All right. Thanks, Steve. Well, Doug, let's get you involved. Canada has already had 2 straight quarters of economic contraction. How important is the USMCA to the broader North American economic outlook today? And what are the risks the outcome sends Canada into a deeper recession?
Hey, Mike, thanks for that. And first of all, I'll just start off by saying that, listening to Steve's comments there and just following through on it, what we've been assuming in terms of our economic forecast is basically something close to the status quo persisting over the next year or so. In other words, we've been basing our forecast on the assumption that we're not going to get a new fully formed deal, and it's also not going to completely fall apart either. Just if we quickly recap, I know there's been a lot of debate over whether Canada was in a recession or not. I think if we just stand back and look at the bigger picture, in the last 4 quarters, really since the trade uncertainty first began to develop, the Canadian economy essentially has not grown. In fact, it actually contracted by 0.1% over the past year. In a very narrow sense, yes, you could say that's a very mild downturn, but by almost any objective measure, you would not say the Canadian economy is in a recession. But it's clearly been a struggle. I would add, by the way, that if we bring Mexico into the picture as well, Mexico's had a very similar economic performance to Canada over the past year. It has really struggled to grow as well. Over the past year, it's seen 2 negative quarters for its GDP. And in both instances, you can tie it directly to the uncertainty that we've been dealing with on the trade side. What's declined in Canada over the past year? It's been exports. The volume of exports is down over the last 4 quarters, and business investment. And that's almost textbook what you would expect in a world where we are dealing with very deep trade uncertainty with our largest trading partner. I would say in terms of the risks, well, the risks clearly are as if things deteriorate from here, if Canada gets affected by even more tariffs, or yes, if the deal gets torn up. I assign a very low probability to that. I'm not particularly concerned that things are going to deteriorate further from here. But what I would say is, as Steve indicated, it's really not a sustainable situation for the industries that are being affected by tariffs. If you look at autos and the various metals industry and lumber, it's not sustainable to deal with these kind of tariffs. I mean, it's been manageable for the past year, but that's not a situation that we're really going to see much business investment in those industries whatsoever in the years ahead. Now, for the rest of the economy, I would say maybe the surprise over the last 16 months is that they were less affected than what we initially were led to believe when the trade tiff really began in late 24 and early 25. And generally speaking, the rest of the economy has been let off a bit lighter. than we would have expected. So I would say overall, the status quo is not a terrible place to be other than the directly affected industries. I would actually expect the Canadian economy to struggle to grow again this year. But we and the consensus are actually a lot more optimistic on 27, even if there is not a fully fledged deal, because we do believe that a lot of the spending that we're seeing on defense and infrastructure and some of the major projects will begin to gel over the next year. And so we would be looking for some modest improvement in the Canadian economy in 2027 if we're dealing with the status quo. Just in terms, as I said, what we're expecting is we are expecting not a big change over the next year on the USMCA. I will just conclude by saying that the US economy has done perfectly fine during this episode, even though they do not have arrangements with their three largest trading partners, China, Mexico, Canada. But largely because of the AI boom, the US economy has still managed to grow at or even a little bit above potential over the past year, even as Canada and Mexico have struggled over the last 4 quarters.
All right, that's helpful, Doug. So let's maybe turn to the markets. From a markets perspective, how should investors think about this trade uncertainty, or particularly maybe in the currency market, especially if this USMCA status is unresolved in the next several months?
Yeah, it's interesting. When we look back over the last 18 months or so, it's pretty obvious that, the markets were deeply focused on the trade relationship, on tariffs through the spring of last year. And then around the middle part of 2025, markets lost interest. At least the equity market did and moved on. It's pretty clear that, first AI and then the conflict with Iran really took the market's attention, and now it's gone back to the AI boom in particular. But I would say the currency markets, and to some extent even the fixed income markets, haven't completely forgotten, and that's definitely the case in Canada. I mean, when we look at the broader currency markets, there's no question that it's not the USMCA, it's not trade that's really first and foremost driving the foreign exchange market. We've seen the US dollar make a nice comeback in recent weeks and recent months, but that is more the AI trade, and now the view that the Fed may actually hike rates. I still, by the way, put a low probability on the Fed actually raising interest rates, but that's, the view of the market, that there's a realistic probability that the next move by the Fed may be to hike. That's what's primarily driving the US dollar higher and what's pushing down on the Canadian dollar and other currencies. It's not really concerns over USMCA, but I do think if you look at it more broadly, there's no question that the uncertainty around Canada's trade relationship with the U.S. has weighed on the Canadian dollar over the past year. And you could make the case that even in the last month, it has acted as a little bit of a drag on the Canadian dollar. And one way you can look at it is, what's the Canadian dollar doing against, say, the euro or the Australian dollar? It has softened against those currencies. In fact, if you look at the Canadian dollar versus the euro, it is close to its lowest level in the last 25 years. Now, some of that is because the ECB and the RBA have actually raised interest rates recently, whereas the Bank of Canada looks as if they're on hold for a while. But I do think it goes a little bit more beyond interest rate policy, this underlying softness in the dollar. I think there is the view that if we don't have certainty in our trade relationship with the US, that's a clear medium to long-term negative for the Canadian dollar. So I do think the market is coming around to the view that it's going to be tough to get a fully fledged deal this year. And that's not necessarily going to push the Canadian dollar down further, but I do think it means that the Canadian dollar is going to struggle to make much headway if we don't get a deal through the second half of the year. I did just briefly mention fixed income markets. I also think fundamentally that's one of the reasons why I don't think the Bank of Canada is going to be raising interest rates. If you go back about a month ago or so, the market actually had rate hikes priced in by the Bank of Canada, 1 or even 2 by the end of this year. And I always said, if we do not get a deal with the US on the USMCA this year, I put very low probability on the Bank of Canada raising interest rates this year. And fundamentally, that's why Canadian rates are more than a percentage point below their US counterparts, because of this ongoing trade uncertainty.
Let's say beyond North America, Doug, how could the results of the USMCA review affect other global trade relationships and trends such as maybe even reshoring?
Well, it's interesting. Of course, one of the big drives of this entire protectionist move, the tariffs by the U.S. administration, is to bring manufacturing back to the U.S., essentially to reshore. I think the success on that front has been mixed at best. Yes, U.S. manufacturing has seen moderate growth over the past year, but I think you can attribute the bulk of that to the boom in AI spending. And really, it's got next to nothing to do with protectionism. And the ultimate goal, I would say, is to bring back manufacturing jobs. And there you can clearly see that at least up to this point, it has not been a success. This set of trade policies, you've actually seen U.S. manufacturing decline, employment decline over the last 12 months. That's even when there's been a boom in spending going on all things related to AI. I'd have to say that is at least a mild disappointment to the administration, that there's been really no net gain in U.S. factory jobs. So why are they not gaining reshoring? Well, simply put, they're slapping tariffs on so many different items. The uncertainty is so great. Think about a U.S. manufacturer that's got to import or use a lot of different inputs, manufacturing inputs. Well, a lot of those are actually much more expensive in the U.S. And so the costs of doing business in the U.S. arguably have gone up as a result of this. Think about the tariffs on, for instance, some of the metals, the inputs. They're much more expensive to do business in the U.S. If, say, you're an automaker or a defense manufacturer, looking at those big run-ups, say, in aluminum prices, it's made the U.S. a bit more of a challenging outlook for the competitiveness, even though they do have a higher tariff wall. So I'd say, the success on that front has been, at best, mixed. And frankly, I think it's been a bit of a failure overall.
Okay, thanks for that. So let's maybe close out with a set of questions for both of you. Stephen, we'll start with you, and then Doug, same question for you. So for business leaders navigating this environment, what are the most important risks to plan for? And where do you still see pockets of opportunity despite the uncertainty?
To start with, it's important to remember that at least 85% of exports from Canada continue to enjoy duty-free access to the U.S. market. And that is unlikely to change over time. And that is certainly much better access than other countries around the world are enjoying at this point in time. But where we are likely to continue to face uncertainty is around the manufacturing sector. And this has to do with the U.S. tariffs on steel, aluminum, autos, and a handful of other products. I think over time, we're likely to see improvement and hopefully more certainty in these areas, because these kinds of tariffs are harming the U.S. economy as well as the Canadian economy. And I think we'll likely see some kind of adjustment over time, but it may be a bumpy road until we get there. And it's going to take a while, I think. So continued uncertainty is going to be the name of the game going forward.
All right, thanks. Doug, same question for you. What are the risks to plan for, and where are the pockets of opportunity?
Yeah, I think it's fairly clear. I certainly wouldn't disagree with Steve on that one, that the main risk, I would say, for businesses is that the uncertainty will linger. I would point out that even if we did sign off on a deal, even if the U.S. administration did, in an optimistic case, sign off on a fully formed deal later this year or even early next year, I don't think that's necessarily a guarantee of certainty under this administration. I mean, think back to a year ago, we had the USMCA in place, and yet that did not spare Canada from very meaningful tariffs on autos and steel, which, were certainly against the spirit of the USMCA, if not the letter. And so I think that businesses, unfortunately, do have to assume that we're going to be dealing with a cloud of uncertainty. And I'll just give you one example. A place like Europe, they gave up a lot, I think, to get some clarity and signed off on a permanent tariff. Well, just last week, the administration, the president, threatened them with the possibility of 100% tariffs if they went through with digital services taxes. Now, we don't know if that's an empty threat or not, but it just shows that even with signed off on what they thought was a deal, that things are never at an end, that they will almost never get complete clarity, at least with this administration. I would say in terms of opportunity, what Steve said is exactly the opportunity I would have pointed to as well. Is I think industries that are not directly affected by tariffs in the U.S. are relatively advantaged to the rest of the world. They are in relatively good shape. We have not seen a lot of companies taking advantage of that. We've actually seen a decline in exports to the U.S. over the past year from Canada. But that is clearly an area of opportunity that Canada is relatively advantaged on the tariff front versus the rest of the world. The other area I would say there's certainly opportunity over the medium and longer term is look at the diversification push that the Carney government is trying to embark on here, trying to kick down doors, both within Canada, I will point out, but even outside of Canada. And I believe there's a lot of goodwill and a lot of opportunity in places like Mexico, in the Mideast, in Europe, in Asia. And I'd like to be optimistic on that front. Yes, it's true that exports to the U.S. have declined over the last year, but they've actually shown some pretty decent growth to the rest of the year, much like our tourism flows And so I think that's also where certainly an area of opportunity lies, particularly when the Canadian dollar is relatively weak against a number of these currencies. I do believe there is real opportunity to diversify here.
All right, one last question for both of you, and same structure. We'll start with you, Steve, and then move to Doug. But if we think beyond the USMCA framework, what does a more fragmented global trade system mean in practical terms from your perspective?
Well, I'd start by saying the most important consideration in all of this is where the U.S. will eventually land on its tariff and trade policy, because we've gone in many different directions over the past year and a half, and the U.S. has been consistently changing its approach. I think it's been a chaotic year with tariffs imposed, tariffs removed, tariffs threatened. And I think a number of informal deals have been reached, which I don't think will stand the test of time. But I think we need to keep in mind that it's only the U.S. that has turned away from trade rules that have been in place for almost 80 years. And the rest of the world is really largely continuing to follow those rules. So the focus is really around the U.S. specifically. So despite the strength of the U.S. market, I think that most countries are trying to reduce their reliance on the U.S. market at this point and trying to negotiate stronger relationships with other countries. Canada is doing that. Europe is doing that. Various other countries are doing that as well. And I think that much of the U.S. approach at the moment with these tariffs, with this kind of approach to trade, is providing a significant advantage to China. And I think China is starting to make significant advances in world trade, and the U.S. is starting to fall a bit behind. So I think those will be the main themes we're looking at going forward if the U.S. maintains its current approach.
All right, thanks. And Doug, let's close out with you. Similar question. What do you think about this fragmented global trade system? And what does that mean for things on a practical basis?
Yeah, I don't want to be a complete echo chamber of what Steve just said, but I do want to reinforce the point he just made, is that when we talk about global fragmentation, this really is a U.S.-led, I guess I'd say, initiative. It's true that the rest of the world is not necessarily fragmenting here. And I think that, again, one area of opportunity is the fact that there still is quite a bit of goodwill within the rest of the world, particularly within the Western nations, but even, some emerging markets as well. And I don't think we should lose sight of that. But to answer the question directly, it essentially throws sand in the gears for the global economy. It's interesting, of course, when we look back on 2025, one of the overriding comments for last year was how resilient the global economy was in the face of all the uncertainty around trade. And part of that, again, is just the fact that it was mostly just the U.S. and not the rest of the world. I also do think that much of the rest of the world just, learned to deal with it and moved on. But growth probably could have been even stronger over the last year. When you think about it, we are dealing with a full-on boom in AI spending, especially in the US. And the global economy could have been even stronger last year and this year without this lingering trade uncertainty. And I guess, what I see is the impact of the fragmentation or the uncertainty around trade with the US is it does dent growth. It does weaken growth. It probably weakens productivity. And I think that's where it actually will hurt the Canadian economy is, we've struggled to have much productivity growth in the last 5, 10, 20 years. In an environment where business investment is just not certain about the trade relationship with the U.S., it's tough for businesses to invest aggressively, and that acts as a block on productivity. But that doesn't just affect Canada. That really does affect the world, that it does act as a bit of a constraint on global growth and global productivity in particular.
Steve and Doug, thanks for your insights. Thank you, everyone, for watching and listening. We'll have a video replay, a podcast episode, and a recap article today from today's event. It'll be available on our website, bmocm.com and commercial.bmo.com. You could also visit BMO's Cross-Border Perspectives Hub for timely insights on geopolitics, global trade, and more. Again, thank you for joining us and wishing you all a great rest of your day.
Thanks for listening. You can follow this podcast on Apple Podcasts, Spotify, or your favorite podcast app. For more episodes, visit bmocm.com/marketsplus.
The views expressed here are those of the participants and may not necessarily represent those of BMO Capital Markets, its affiliates, or subsidiaries.
For BMO disclosures, please visit bmocm.com/podcast/disclaimer.